Hey guys, Roberto here, and this is another video on price action and Fibonacci levels. If you trade Forex, you always notice that markets, when they're trending, they pull back. And why do they pull back at specific areas? And I'll show you why. We're looking at the euro dollar on a 2-hour chart, and I've included these fractals so I can use these as my point of reference when I draw my Fibonacci levels. So notice how we had a nice rally, and then price, instead of pulling, continuing to rally, it pulls back violently at these levels. Now that's a Fibonacci extension. So if I would take my Fibonacci tool and draw it from this swing low, which is a fractal, to the next fractal here, notice where price found resistance and turned around at the extension of 161. So again, if you've watched my videos, you've noticed that I'm always looking for an A, B, C, D pattern, because that's how financial markets move, and then when it's in an uptrend, and then A, B, C, D pattern in the opposite direction in a downtrend. Okay? But using a Fibonacci tool will give you a point of reference, knowing where, if you were to take this trade, and you would know where to exit the trade, and you would know to reverse positions for a scalping opportunity at an extension. Let's look at gold, because I saw a good opportunity on gold, and I did take it on one of the accounts. Notice what's happening here. We have a resistance level, and where is that resistance level? But if we look at a daily chart, the resistance is a previous resistance all the way up here at 1833, 1834 level. Okay. Now if we take our Fibonacci tool, this is a 4-hour chart, from the most swing low to the swing high, look where price finally found resistance, right at the 161 retracement. And this is valuable, because if you are trading and you're looking, and this was a non-farm payroll trade, and you were long, then you need to know where to exit that trade and reverse positions, and that's where you needed to exit that trade. And I did take that trade, exited, and then took a trade in the opposite direction for a scalping opportunity. We're in an uptrend, but this is the final A, B, C, D pattern, and then it's going to create another A, B, C, D pattern. On this chart, on USD yen, notice we have a fractal, a swing high, and a swing low. So if I take my Fibonacci tool and connect those swing points, price retraces up to 38%. That would be our sell target. And because it's Friday, I would assume, it did get close to the 61% retracement, but still that's a nice sell-off from the resistance at 38% all the way down to where price closed on Friday, 50 pips. Okay. So using a Fibonacci tool and anticipating moves or targets, very valuable using a Fibonacci tool. So here we have a swing low and a swing high. Now price came back down. Notice that it came back down to this green level. This Fibonacci tool is color-coded. So if price comes back down to a blue zone, it should go all the way up to the blue zone up here. But it came all the way down close to that green zone and target, actually almost in between, and there was your target. So you would be buying here and exiting here. Okay. Let's look at some more setup. So here's another trade setup on 4-hour chart on USD yen. Notice this candle here, and I need to reset the candlestick patterns. When you switch time frames, you always have to reset the candlesticks. So there's a bullish piercing line, and why did price come all the way down to here and then turn around and went north? Okay, so if we take our Fibonacci tool from this swing high to this swing low, price rallied up to 61%. That's our sell entry, and look where price finally found support at the 161 retracement level. So it's exciting using this tool and understanding how to draw your lines, or rather how to draw a Fibonacci tool, so you can find these targets and possibly reverse position. Now, what's great about the Smart Trader platform, that it has a smart Fibonacci tool. So you can, at any point, at any fractal, just click. Now, it's not showing the solid colors because these trade signals, rather this Fibonacci, are complete, so they're no longer valid because price has moved on. But at one point, if you took this Fibonacci tool and draw from the swing high, swing low, all this would have been colored in, and I'll show you an example of that, and it would show you where price would finally hit support and finish this A, B, C, D pattern. Okay, so here's A, B, C, and then finally D. Okay, so let me just see if we have one right now that I can show that is active. And there it is. You see that the colors on this AB pattern. So this is an active AB pattern. Not until it gets all the way down to, price gets all the way down to the 61% is this trade finished. Okay, and then the colors go away, and then we start looking for another. So this is A, B, C, D, and then these colors fade, and then we have another A, and then we have to start all over again. So C becomes A, and D becomes B, and then a pullback C, and then target D. Okay, I hope that that was helpful. See everyone in the trade room at 8:30.